Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, August 9th, 2019. We're going to start out here with the daily charts, and then there's some things I want to take a look at, point out on the intraday charts. If you're a member of the site, I did 2 videos today. The last one I got out there, started at 3 p.m., got it out before the half hour or so before trading wrapped up, because I wanted to talk about positioning considerations to make going into the weekend. So that one's a little more in depth. I'm just going to touch on that here and show you what really happened today. Not anything very significant on the daily chart, because we had mostly an indecision day. We had what's called an inside day. Here, let me turn off these trend lines and show you what I'm talking about. So today's candle, you can see, is inside of yesterday's candle. So from one aspect, it does give me a slight check mark, an additional check mark for the bears, but not a complete win, because for the most part this is an indecision candle. It can still go either way. I talked about in the video earlier today for members. Let me zoom back and revisit the correction that we had last fall, because yesterday I pointed out the fact that the big green candles that we saw is, despite, some might think, oh my gosh, how can the market rally so hard if if the correction's not over, if we're not going to new highs. And so I simply pointed out this drop off the October highs, the first leg down, was the closest thing we've had to the recent drop that we had last week. Last week. And this, as I said, that one ended with, as most of these little snapback rallies do, with a big green candle. It's a buying climax. The shorts that got in late, or those that held too long and don't like to see things go against their position, they get squeezed out. Longs come in because they, buying the dip, they think the worst is over, and then boom. So what I wanted to point out is, like I said back then, the next day we went up a little bit but closed right about at the same high, a little bit above that previous candle. But then this is where it comes in, and this is what I'm looking at right now and watching, and this really goes more to swing trading, positioning, everything else, is that the important thing is that candle. When you have a bullish candle like that, it has no business being faded, especially quickly. And so that was it. So when we came back down the day after, remember, we had a little sort of indecision day there as well. We closed right at the top end of the candle, but it's for the most part an indecision candle there. And then we had a big red candle. Sellers stepped in. The next day, the bulls tried to take it up early on, and then boom, they took it down, and that was it. That's all she wrote. So as you can see there, we closed below the green candle, right about here, those 2 days, and that was it. Next leg down comes, and it's impulsive. So this is what I'm looking for now. Now, same thing on the next counter trend rally right there. We started moving up, had a little ABC corrective wave, big green day. Dip buyers high-fiving themselves, shorts dejected because they've been squeezed out again if they got in too late, and that was it. And really the catalyst there is, I wanted to point this out. Just like today, we had an indecision candle. So it could have went either way. It didn't. We know which way that one went. But, if they could have built on the gains, sure, we may have headed up to new highs. Again, there was a lot priced in back then. If you, looked at my analysis, the move was identified down to the very day the market broke down. It was XLK broke down, gave us those sell signals. And again, I was looking for, a much deeper move than that. So that one we dropped. And where the catalyst was to continue the next wave down was once again a break and close below that green candle. You can see there another big buying climax. This one is not a large candle, not the body, but the entire candle is, because we closed up near the highs on that one. And again, wiped out with a big red candle the following day. Bearish candle there, not a bearish engulfing, but a bearish candle, closed way below. All my red candles are set, all my candles are set to color coded to show you if we closed positive or negative from the prior day, plus or minus. And so that's it. So that's what I'm looking for this time around. Let's go back to today and just wrap that up. So there we are today. An indecision candle. I made it clear where I think we're going. As I said yesterday, was on a scale 1 to 10. My words was that was a 10 for an objective shorting op. I may be proven wrong, and that's the thing. We can go up to next week. We can gap up and run. Obviously, if we can close, whether we pop it intraday or not, how we close next week going forward could. It's not an all or none thing, but it will certainly be a check mark for the bulls if they can close Monday above that green candle, and it would certainly be a check mark for the bears, a big one, if we close below it. So what I said in that video that I wanted to get out before the close today, for members, because I had several questions. Randy, I have shorts. What do you think about going home short? Someone else said they didn't have any short positions. What do you think about taking a short position? And my reply to that, if I didn't have anything, if I was flat all in cash, I would have shorted today, but it would have been a fractional short position because there's work to be done. So anywhere from a quarter to a half, and the work to be done, and this is where I'm going, will be number one, a break below, especially a close. And as I like to say, the redder the better, below yesterday's candlestick. That would be a knife through the heart of the bulls that bought that, started stepping in to buy thinking the worst was over. The shorts that got squeezed out would be frustrated and they'll want back in. And then the next step after that would be the bottom of Monday's gap. This is Monday's big gap right here. So you look at the high on that candlestick right there. If we get down into there, intraday, especially a solid close, that would be check mark number 2 for the bearish case. So again, check mark 1, take out the green candle. Check mark 2, take out that the big gap, because remember, we traded all week until the breakout. We were testing, hitting that on the intraday charts, finally popped it. So that's a big, it was resistance and now support on the way down. And then finally, of course, would be to undercut last week's lows, Monday's lows. That will have taken out the 200-day exponential moving average, which was already tested twice this week and successfully held. And again, this is why, as much as I, still maintain, I think we're getting at least another leg down, at least one more leg down. The reason that you don't have, at least in my opinion, an all clear short signal is because, look, we've successfully hit support. It wasn't just a 200-day on the indexes. As I mentioned, every market leading stock, at least those that I covered in that video, they all hit and tested on 1 or 2 days at least. They tested and successfully held and rallied off those support levels. And so, as I like to say, support is support until unless broken. So that would be the final check mark, in my opinion, would be an undercut of Monday's lows, and at that point, my expectation would not be for any more of this, back and forth chop. It would be for a more impulsive drop once that's taken out. In fact, even if we start getting close to that, I think we'll start the selling will start to accelerate, and then we'll have another impulsive leg down comparable to this, and quite likely even more. So let's stop there. Members, I've already shared some of my targets. At this point in time, these are under consideration for official trades, so I'm not going to get specific on targets anymore, but let's look at some other levels to watch on the 60-minute charts. Again, on the site, I will cover those levels. 60-minute charts, there's, if you recall from yesterday's video, said there's 2 objective times to short a stock, either a bounce back into resistance, which we hit my uppermost bounce targets at 188.37 on QQQ, same thing on SPY. So that was an objective short, and then I said a break of this trend line, which we got this morning. So there was your sell signal, and that was plenty of downside from there. So that was objective entry 1, objective entry number 2 right there. This is a SPY 60-minute chart, same story, run up into resistance, breakdown, and that's where we are. Now let's look at a couple other charts. We'll look at the futures, and then I want to look at the 2-minute charts on QQQ and SPY. Okay, so my first post of the day on the site was this one here, stock futures, bull flag breakout or fake out. And what that showed here is I mentioned that we had these, here I'll expand the charts. I said at this point this morning we had NQ breaking above very clean, very clear and obvious bull flag patterns, and this is gonna, there's several points I want to make to this, and plays into my analysis. So obviously I make it very clear, I'm not a big fan unless I have no opinion. If that case, I'll tell you coin toss odds, but when I have an opinion, I'm going to give it to you. And so I was expecting the fake out, and so we broke out. And again, the more obvious a pattern is, the more likely traders are to see it. So here, we'll zoom in a little bit. You can pan and scroll on the charts on the site. There's a breakout. It's impulsive, everything a bull wants to see. However, we have resistance right above, and based on where I think we are in the cycle. And here's my point. This is, I always talk about, the charts are dynamic, and so is my analysis. Sometimes I like to watch and observe a move, or at least, see what goes on. And the fact that this was a fake out in a strong, bull market, if we're headed to new highs, and again, we may be, but I don't think we are right now anytime soon. But you get a bull flag like this on the futures, they take it and run. The measured target for a bull flag is the distance of the flagpole, the move leading up to it, added to the lowest point of the flag. So by all means, the bulls had it right there. The ball was in their court to take it and run, and let that bull flag play out, but they didn't. So that tells me right now there's a lot of sellers lurking in the shadows, and when you get these failed breakouts, they're pretty powerful. So that was NQ. This was ES. ES had the same thing, and right after it broke out, and again we had resistance right above, so I figured it'd break out. Now we didn't go all the way down here yet, quote unquote yet. I think we will, but that'll have to be continued. Let's take a look at what happened since then. Remember, those were posted this morning. So pull up NQ and zoom in a little bit here, take it in tight. These are the flags. Now the flags have been since stretched and distorted. They were right here earlier, the bull flags, and again I've zoomed in so much you don't see that impulsive move up. I'd have to, here, I'll show you what I'm talking about. There it is. So you can see there's the impulsive right here, the move up, the flagpole, and the flags look better. But when I stretch the chart like this to zoom in, it kind of distorts it a little bit, but still. And so there's the false breakout right into that resistance. This is why, again, I said it this morning. Some traders I've heard, folks that do technical analysis out there say, "Oh, just trade the charts. You shouldn't have an opinion where the stocks go, and just trade the technicals." To me, that might work for them. I have to have an opinion, because if I think a breakout's going to fail, A, I won't take it, and if I'm right, I'm going to save myself a loss. And B, more importantly, I love failed breakouts, bullish or bearish. Why? Because they're one of the most powerful things in trading, because once you have a false breakout, aka bull trap in this case, failed breakout, the reversal is swift, and that's exactly what happened. We're going to look at that in the 1 minute charts. A very impulsive reversal. Why? Because all the bulls, or whoever it was, traders, let's just say, that took this breakout got burned, and then their stops. If I take a bull trap, a bull flag breakout, I'm going to have a stop shortly below entry. Why? Because when a bull flag breaks out, what you want to see, the move should be equally as impulsive as the move leading up to the flag. You shouldn't come back in. Sometimes I've seen bull flags get back tested. There's exceptions to everything, but in this case, you didn't. You had a big drop there. And then at the end of the day, you can see we came up. I extended that trend line, and it's a 60-minute chart here, but you can see several attempts intraday to pop it. Each and every one rejected, starting with that first one. See these skinny parts, the white part, those are candlestick shadows. They're called wicks up top, tails on the bottom. That means intra 60-minute period, we popped them, but that trend line was respected and continued to keep this near-term downtrend intact. And it's really no longer a flag. It's been foiled. It's been traded through so many times and so long. And so then finally, to take it in a little bit further, you can see where we stopped today. Let me show you one more. Okay, so this morning I posted that those levels we reversed today at the lows. I posted that ES after that breakdown, that failed breakout, and I was able to come into the day short and then reverse right here. I posted these as day trading setups in the day trading group, in the trading room. Here's ES. See that uptrend line? I said ES was at support, at trend line support, where reversal's likely, and I said NQ was at this very same moment at that 76.04.75 support right there. And so I had us bouncing and then continuing lower. I went on to say in that same post just below, I followed up with saying I could add, and did add, an uptrend line off the lows. So now let's look at those. Let's see, NQ, let's show you that one. So there is the uptrend line. I'm going to have to zoom it out a little bit more. Okay, so there's that 76.04 level I posted this morning. So I was able to cover, reverse, go long there, because that was not just price support, but also trendline support, as well as support on ES. So when you have both index futures falling to a pretty well-defined support level, and again, these levels aren't arbitrary or random. I think this level was on this chart for the last week or so. We hit those levels after a pretty good swoon down. There were no guarantees it would have played out, but it was an objective level, for me to reverse and say as a day trade for a pop trade, day trade to go long there. So that was again excellent opportunity to cover and reverse and ES. Let's show you that one. So really, what I'm focused on here, guys, is the fact that volatility has expanded, and there's two things that happen when volatility expands. Is number one, you have to expect these big intraday swings, 2-3% or more, both in the futures overnight and the regular session. Volatility is there. And then what happens too is when you have a lot of volatility, markets are swinging everywhere, technical analysis shines. It's where day traders come in and play because there's all this volatility. So, you can make in a single day trading, what you can make in weeks, sometimes months, swing trading. It's tremendous because with day trades, you don't have overnight risk. You take oversized positions. And so the opportunity was there. There's that trend line on ES. You can see the reversal. Now let's wrap this up with a look at the intraday charts. Okay, so we'll scroll down. That was first. I mentioned objective longs there, increasing the odds for a bounce. And then the next one up, where was it? I posted these 2-minute charts here. Followed up with that. And now these coincided perfectly because these are, I shared, some people like to trade the Qs and SPY instead of the futures. And you can do that. You can leverage up just as well there if you have a margin account. So at the lows today, let me just show you what we're looking at. This is a 2-minute chart. Every candlestick is 2 minutes. Here's the daybreak line. So this is today. We have just a beautiful trend line. Here's the point I'm trying to make about technical analysis working so well. Here's an uptrend line. I started pointing this out the other day, this uptrend line. Look how clean that is. It doesn't get any better than that. And it forms a beautiful bearish rising wedge right there. That was yesterday's close. So this was the point when I said on a scale 1 to 10, it was a 10 shorting op because we were at resistance, those levels and other reasons on the 60-minute and daily charts. And so this morning, we gapped down. That was a sell signal right there. We gapped down below the wedge, and then look at that. If you missed that, you had an even better opportunity there on the back test. Here, let me zoom in a little bit so you can see it there. There's a breakdown at the open, this white line right here, back test, and boom, that's all she wrote. So go back to that chart for a second. And then today, this is what happened. So, again, the case was made to go home short based on that. And then today, if you're an active trader, again, cover with a combination of these 2-minute charts and the 60-minute charts. 60-minute charts are more significant. You had very good support there. And at the same time that you had these beautiful little bullish falling wedge patterns right there. Nice and clean, well-defined. There's your breakout. Once again, a back test. If you missed the breakout, you had a second shot there with an even better entry. And I listed, bounce target range up to 186.76 right there. Look at that. That was hit and slightly exceeded. And that's where I got out and reversed and then had 2 more trades after that, added to that short position. I'll get to that in a second. And I also wanted to say this. This is a great example, this chart, of how, regardless of what time frame you're trading, whether you're trading here, you're day trading, you're trying to do quick hit and runs, or you're trading a daily chart, a weekly chart, it doesn't matter. The point I was making here, and I say this often because people ask, well, how do you come up with your price targets? How do you gauge how far something will go, where to, And what I said, and I always say this, is the scope of a move relative to a chart pattern, in this case this is a bearish rising wedge, is commensurate with the size of the pattern. So this is at least on this 2-minute chart. Now this isn't even going to show up on a 60-minute or daily chart. You won't see it. But if you're in this world of these intraday charts, that big wedge lead to the big drop, and this smaller wedge here led to, at least so far today, a smaller drop that was in line proportional, if you will, to the drop on this one, and that's why my target range was right here. That's why I wasn't looking, to swing for the fences on that long trade, looking to get in and get out. On that, let's just take a look at the chart of QQQ. Let's go to that 2-minute chart. I want to show you something. Let's see here. So let's say you were trading the Qs right here, trading QQQ. Here's that same wedge. I just want to put this in perspective for you. So if you came into the day short, there was a drop into those lows where we hit those support levels. That's about 1.7, 1.75%. From there, again, that was a buy signal, an objective long at least, and the breakout was the buy signal to confirm it. So just like there were 2 short entries recently, one at resistance on those longer term charts, the second on the breakdown here, and that trend line that I showed you on the 60-minute chart, which comes in with this one as well. Those were your 2 objective short entries. You had 2 objective long entries today, one at support and the other on the breakout of this bullish falling wedge, breakout backtest, boom. And so what I say, 1.75 down drop, cover reverse, that's about a 1.25% rally. There's what is that, 4% right there, I'm sorry, 3%, 3% round trip. And then as I said, this is where my target was today, and so I shorted that one, held on because we didn't go that much higher. We had this another bull flag breakout, and I mentioned this at the time. It was pointed out on the site. I said there are bull flags, and I showed these on the 2-minute charts. But here, let me show you what I said on those. Okay, so those are pointed here, breakout or fake out once again. And there's a lot of takeaways from this, other than just general tips on how to day trade when the volatility's there. Don't try to. You're not going to do this in a slow, steady grind market like we had for most of 2018 and 2017, or leading up to the 2018 highs. But again, preferred scenario. And why? Because I'm seeing more and more bearish action, more of what I'm seeing, and it goes into my longer term view that there's more downsides. So again, if I thought there were more buyers in this market and we were going higher, I'd be long, and I'd be looking to go long, and this would be my preferred scenario. So again, I saw a breakout, but I chose not to cover my shorts where I might normally, because I figured it would fail, which it did. So that was earlier today, and these are all time stamped. You can see I was 2:30 this afternoon, and that went on. Same thing with SPY. I showed you SPY. These would have been the measured targets. And so again, going back to where we were today, what happened is, I know this is busy. I'm zoomed in a little on this chart. Though that was the breakouts. Looked legit. If I was bullish, I would have said, "Oh yeah, great, impulsive breakout," but it got sold into. Yeah, there was a little drift higher, but this is not. And I mentioned that too at the time in the trading room. When you do this, when you don't continue to run, that is not indicative of a bull flag. It's not what you want to see. It's not ideal. Doesn't mean that bull flag pattern can't play out, but a bull flag should be an equally impulsive move that doesn't look back with very few givebacks, and that is not what we saw here. So then, okay, so that was day trading up 1, 2, and reverse there, and then shortly before the close, here I'll get to those. Posted the last and final setup for the day for day traders or swing traders if you want to take something home. And look at these, just textbook, beautiful bearish rising wedges, confirm with the divergence that I like to see, saying that a sell signal would come on a break of both those wedges on NQ and ES. I gave you targets there, these lines, but I said, my preference just trail stop down. I said I'm not going to cover there. I'll trail stop down because I think there's more downside. Just ride this short trade down into the close. So that's that. And shortly after those were posted, this was a breakdown. So from that point, I'll say from that point, we'll just say if you took that one, there was another almost 0.5% drop into the close on both QQQ. There's QQQ. And SPY, there it is. And so, and look where they hit too. SPY right back and hammered right off. Remember that 291.39 bounce target I had here? This is where the technicals are working well. Traders are looking at these levels, and so to go back to QQQ, or if you trade NQ for example, those trades cumulatively, that 3 long or the 2 shorts and 1 long trade today. combined for about a 3.5% gain. That is every 1% you make on even a single contract to NQ equates to about 1,500, a little over 1,500 in profit. So you're talking, one contract to NQ traded long and short today on these intraday charts. You're talking, $5,000 or so, just trading one contract. And again, I know that some people, NQs are a little large. They represent about $153,000 of the NDX, NASDAQ 100. But they have the MNQs now. Those are the mini NQs, which trade at a fraction. I think they're 1/10 of the size. So you can trade those as well. Or, if you're day trading, what's it do? You can leverage up. If you have a margin account, you can trade QQQ. And again, the point is, you get 3.5% or even 3% in a day trading like this, where it might not seem like a lot. Remember, in day trading, you take many times what you take on a swing trade position because you don't have any overnight risk. There's not going to be any gaps against your position. Sure, Trump can tweet and they can run up, but like always, when you're day trading, you should have stops in place just like you do on a swing trade. So if you shorted this breakdown today or this wedge, you should have had a stop somewhere above. There was very good resistance right there at 293, which is also where SPY stopped. So that's that. All right, guys, so I wanted to pass along all those trading tips. And again, look at the wedges, the size, whether you're trading wedges, flags, any other type of technical pattern. On the 1 minute charts, I don't look for head and shoulders and all those other complex patterns. Just I look for things like bearish and bullish candlesticks, trend line breakouts, wedges, things like that. And again, that's where the opportunities have lied, even though today, to loop back where I started this video, was kind of a go nowhere day. We closed down, but again, I can't say that that's, like I said, give it a little bit of a check mark to the bears, but still, we haven't taken out that candle. So, for the most part, a swing trader really went nowhere today. If you were short, a little bit there, 0.68% drop, 1% drop, and then QQQ. So that's it. To just wrap it up, the levels that I mentioned for swing trading, like I said, are the bottom of this candle, the gap from last Monday or this Monday, and then of course a break below those recent lows. And anything else, keep it very simple. If I'm wrong, if we go up a lot more, from where we're at now, especially above this downtrend line off the highs on QQQ and SPY, you have downtrend lines. That's where I'm, that's all this talk about where we might be headed is wrong. And, I'll start to scale out a stop. My position's up here. And if we pop that trend line, we're probably going to go to new highs. It's not my preferred scenario, but you have to respect it. So again, there's not a lot to be said if we start going up, other than everything I scaled back into all the swing short positions, not my day trade stuff. That's in and out stuff. If the market starts to go up next week, and it looks like we're headed up here, especially poised to close above this resistance zone, and especially above this level, at that point I'll be scaling out of the shorts, and I'll sit back and wait patiently for the next objective entry. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it and have a great weekend.